Hey guys, it's Max Convexity. Let's have a 5-minute option lesson today. I hope you guys watched my lesson yesterday on Nvidia earnings. I gave a bullish play for earnings and a bearish play for earnings. Well, the bullish play is doing a lot better than the bearish play. I told you guys not to play them either, and I told you especially not to play both, and that's a good thing because the bearish play would have lost more than the bullish play. But the bullish play is looking really nice. And I want to show you how to do the same thing in Square. Okay, so here's a trick I've learned. Okay, well, Square has earnings coming out tomorrow is the first thing. That's why we're looking at Square. All right, so what I'm going to do is I'm going to look at the options expiring Friday. And on Tasty Trade, they put a little brown border here that shows you what the expected move is. The yellow is the strike price. It's where the stock is now. You can also look at the expected move here. It's 7.79, $7.79. That is the move between now and Friday, the end of the day Friday, that the options market sees that Square will make. So I'm looking at the 75, 76 area up here for a bullish move. That looks like a good target to shoot for. So, and here's something else I noticed. What I'm trying to take advantage of. Look at the bullish move area. The options are priced around $1.80. Where you look at the bearish move area, the options are priced around 90 cents or $1. So, you know, $1.50. It's hard to, this is kind of between strikes. Call it a $1.50 on the bullish and call it $1 on the bearish side. The market makers think this thing is going up too, or the general public does, or whoever. It's priced into the option. So I'm always taking the opinion that I don't have any idea what it's going to do per se. I just want to monetize the imbalances. I'm trying to make money off these options. Should be the same. It should be $1.50 both ways for calls and puts. The fact that there's more money here, to me, is an opportunity. So let me show you how I would try to take advantage of it, how I would try to monetize it. Okay, I saved a trade that's called a bullish trade for Square earnings. So I've already saved it. All right, but here's what I would do. It's the same kind of trade as yesterday. It's a broken wing butterfly. And a broken wing butterfly, you have two strikes that are sold in the middle, and then you're long a strike above the market and long another strike the other way. So in this case, that you're long the 69, but then you're short the 75 twice. Then you're long the 79. Okay, so what does this do for you? If we do get a move right up to the expected area, you know, here, I'll put it on tomorrow afternoon. Here's tomorrow afternoon. So, you know, what time is this? Well, this is like tomorrow at 1 o'clock. So if we do get what the market makers expect to make, this position will be worth around $200. You can try to hold it all the way till expiration if you want and play for the $400. It's kind of like a little built-in lotto ticket or whatever. But if I was doing this and I hit it tomorrow, I would just take it off for, you know, I'm just trying to make a couple $100. I'm trying to risk 100 and make a couple hundred, but with the math on my side. When I'm selling this 75 option, this is the option that's overpriced. It's priced at $1.80, where the equivalent options on the other side, on the put side, are around $1. So to monetize this extra 80 cents, that's why I'm putting on this position, or that's why I could put on this position. So you sell this one twice. You put the sold strike where you think it's going to move. I put the sold strike right where the market is pricing it. It was between 75 and 76. You can move this up here to 76 and do a similar type trade. You know, I mean, that one actually risk 125. That one might be a little better trade. I think I'm going to switch to that one. Like I said, I haven't made these yet. I'm not going to. I'm not playing Square earnings. Earnings are fun to play, but they're a crapshoot like anything else. But the reason I'm using these earnings as an example, I'm trying to show everyone why I like options so much, and I like it because of the mathematical edge. And these broken wing butterflies are a way to monetize that mathematical edge. Because in essence, I'm selling that 75, that option that's priced so high, I'm selling it. So, you know, but the reason I don't sell just it is because of the unlimited downside. If Square does blow out earnings, it goes to $120, I don't want to lose $8,500. But I do want to get some of this money. That money is, that's where the edge comes in, is selling that. So what you can do is, if you can sell that as part of a spread, I'm going to include this option and this option. You sell it as part of a spread, and then you don't have to worry about the unlimited upside. In fact, what else helps you is because you buy the 79 call out here to protect you from losing unlimited on the upside. So here's another way to look at this. Here's another way. So let's say you didn't know about butterfly spreads, but you knew about options and you wanted to get some of this money. What you could do, what somebody that's less experienced might do, is they might just buy an option. So let's just say they just buy this 69 call, which I'm buying too as part of my spread. But if I bought only the 69 call, well, a few things would happen. One thing, I would lose, if I'm wrong, I would lose $345 instead of $125. So it's more expensive. But even if the market moves to the expected move, which is 75, it's a $269 winner. I mean, that's good for sure. But this way, it's a $500 winner if it moves to the expected move. I'm trying to risk less and make more. That's what gets me so fired up about options, is putting on trades to where you risk less and you have a higher potential profit. So we'll see how this trade turns out tomorrow. I'll come back on and we'll see how it would have done. And I might keep doing these options ones or these earnings trades, because these are a good, quick example of how powerful options are for you. Because when you have earnings coming out the next day, that's just a good way to look at volatility that's jacked. What I'm trying to do, and what all option sellers are trying to do, is trying to monetize the volatility being jacked. This is one of many ways you can do it. You could do the same trade on the bearish side if you were bearish on Square earnings. The direction doesn't matter really that much. I'm just showing you guys how to get a piece of this juicy 75 call without exposing yourself to unlimited, downside on the upside if it blows out the other way. You could also, if a person was also bullish, they could just buy the stock. The stock's at 67, and if it goes to 75, that'd be a $700 winner. That'd be fine too. But buying the stock, you don't capture any extrinsic premium. It's a straight coin flip. There's no mathematical edge. I like to make bets where I have a mathematical edge. The option bets, if you do it right, are like flipping a coin that comes up heads twice as often as it comes up tails. Anyway, we'll see how this trade does. Like I always remind you, it's not financial advice, and please don't do this trade with your own money. This is just an example that I pulled up real quick, and I'm not doing it with my own money, and I didn't play NVIDIA with my own money either. My own money is really boring. Someday I'll explain what I do with it, but it's super boring. Super, super boring. I wish I had big enough balls to put on an NVIDIA earnings trade. And man, I would have made so much money yesterday, but I didn't want to. The NVIDIA trade cost like $1,200 to put on. And if I was wrong about it going up, I didn't want to lose $1,200. So that's the reason I didn't do that. All right, guys, and you shouldn't either. You guys have a great day, and I'll talk to you later.